I'm going to show you how to retire on $150,000 completely tax-free. Now, most people have been conditioned to max out their 401k, but that's actually going to create a huge tax bill for them later on. So proper planning is all about balance. It's not about just how much you make or how much you accumulate, but how much you get to keep. Come on, let's check this out. For the 2021 tax year, the year that we're filing for right now, a married retiree couple over the age of 65 has a standard deduction of $25,100. Their first bucket of money can come from their pre-tax 401k, and they can pull $25,000 out and pay 0% income tax on it. Then we can pivot to a second bucket of money, a Roth 401k or a Roth IRA. They can pull $25,000 out of that and pay 0% income tax. Now, they don't want their entire retirement completely dependent on the performance of the stock market, so they have funded a cash value life insurance program, and they can pull $50,000 out of that and pay 0% income tax on it. So in total, they have 3 buckets of money, totaling $100,000 worth of income, paying 0% income tax on it. 50% of that income is dependent on the performance of the stock market, and 50% of that income is from guaranteed sources. Maybe you've saved and invested even more than that. Did you know that if you keep your income below a certain threshold, you can pull $55,000 of capital gains and not pay any income tax on it? Check this out. 2021 taxable income, excluding the capital gain, is $25,000 from our 401k. We're married, filing jointly. If our pre-tax capital gain is $55,000, that means the total taxable income is $80,000. Now remember, this is long-term capital gains, so held to asset for more than a year. The estimated capital gains tax is 0. You can pull $55,000 of long-term capital gains and it's taxed at 0 as long as your taxable income is $25,000 that were taken from the 401k. So there you have it, folks. You can add on to this $100,000 that is completely tax-free. Add on a brokerage account and pull $55,000 and have that be tax-free as well. So it's all about tax planning and proper balance of insurance and investments. And if you pulled $155,000 out of your pre-tax 401k, you'd be in the 24% tax bracket, and you'd make 85% of your Social Security taxable. It's not just about how much you make, it's about how much you keep. The typical financial advice and financial advisor is not setting you up to be the most efficient. So follow me for more financial tips.